Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Apple takes flight. Well, with all the talk about artificial intelligence and the number one stock market beneficiary, that is AI chipmaker NVIDIA, investors had seemingly forgotten about Apple, and for good reason. That stock had basically been flat over the course of the past year, even as the broader market has done rather well. That all changed this past week, though, as Apple stock blasted off, rising more than 10% in just 2 trading days in the wake of the company's Worldwide Developers Conference. On Monday, Apple revealed its AI strategy in a keynote at the conference. And starting this fall, it's going to be adding a little bit of AI, which it's calling Apple Intelligence, into many of its core apps and devices. Now, the stock's initial reaction was actually one of disappointment, as the shares fell modestly during and immediately following the presentation. After sleeping on it, however, investors did a complete about-face, sending the shares 7% higher the next day, followed by a 3% gain the day after that. Now, only time will tell if Apple's AI hype will have staying power, but the stock is looking a little bit pricey at these levels. For this week's featured insight, momentum is powerful. Traditional investors like to look at fundamental metrics like revenue, earnings, and dividends relative to a stock's price to decide whether or not it's a good buy. And that's certainly a prudent approach. It can be confounding, however, when some stocks seem to defy gravity to fly to heights that make little rational sense relative to their underlying fundamentals. Economist John Maynard Keynes is credited with saying that markets can remain irrational longer than you can remain solvent. And what he implies in his quote is that market momentum is a powerful force. Many investors buy stocks simply because their price is going up, or they sell stocks simply because the price is going down. Either way, this dynamic causes the prevailing trend to persist, sometimes much longer than would seem logical based on fundamental analysis. It's important to understand the fundamentals so long as you also respect the power of momentum in markets. Looking ahead, economy rests on the consumer. The U.S. consumer is a powerful force. Consumer spending makes up about 70% of the American economy, and our consumers know how to spend. The last few years have been strong in terms of consumer spending, although inflation has certainly been a headwind. We're making progress on that front, but the cumulative effects of past inflation aren't going away. Now, with excess savings from pandemic-era stimulus largely spent down, and lines of credit reaching their limits along with much higher interest rates, the next 6 months will be a big test to see if the consumer can hang in there. We'll get some data on the consumer next week with the monthly retail sales numbers for May. Retail sales are expected to be about flat month over month and up 0.2% if you exclude autos. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.